Okay, traders. So as you see in the headings on there, we are going to be talking today about the steps, the simple steps that I use to find my day trades or my entry on the NQ or crude oil or gold. As you can see up here, I basically trade crude oil, CL, gold, and NQ. And in order for me to find trades, I have to be able to find different levels. And the strategy I use to find those different levels, they are very simple. So without any delay, I want us to jump right into this, and I want us to see what are the different steps. I basically use 3 steps, okay? So first of all, in order for you to be able to find a trade, as you've heard before, the trend is your friend, right? That's a fact. Like if you go down to the river and you decided to swim, you're not going to swim against the current. I mean, you can, but what's going to happen is you're going to get exhausted very quickly and you're going to get washed away down to the ocean. I think that's where, the river dumps itself. But so it's going to really be hard. But if you swim according to the current of the river, basically you are just going to just be relaxed and use very less energy and be very less stressed. So it's the same way with trading, right? So in trading, before you find a trade, before you get into anything, you first want to see where the market is heading to, okay? And how do you know that? There is number of time frames that you can find your trade on. Usually I will find mine on a 15 minutes time frame, and then I will confirm that on a 1 hour time frame. So I kind of go back and forth with a trend on a 1 hour time frame and also the 15 minutes time frame. So in this case here now, and sometimes it's possible to try to make up something when it's not there. You got to be careful with that too, especially as a beginner day trader, right? Like if you don't see the trend, because then you want to make something up, or you want to kind of but in order to find a trend, there are 3 trends, right? There's uptrend, there's downtrend, and there's the sideways trends. As a day trader, you should always be trying to be trading in the uptrend or the downtrend. Now, unless you are a scalper, then I'll say, of course, you can trade in the sideways trend, because then you see that there are bottoms and there are tops. There are bottoms or support and resistance that you see that you kind of are, engaging into hugely with big contracts and then getting in and out in few seconds or few minutes, basically. So, but other than that, I want us to find a very, since we are learning on here, I'm going to find something that is more clean. So in order to find a trend, like I said, I find my trend on the 15-minute time frame. There's always has to be 3 points. Okay, so I'm using the trade of a chart, and I'm also going to make a video on how to use the trade of a chart. So here, in order to find a trend, 3 points, right? First point is going to be point number 1, point number 2, and point number 3 right here. That's for uptrend. Okay, guys. So, and then downtrend is the exact opposite of what we just did. Go here, and go here. So you see this is the exact opposite of what we just did, right? So 3 points, and then how do you know the market is in a trend? Now the 3 points here, this is a higher low. Now from point number 1 all the way to 2, from 0 to 1 is higher low followed by a lower low followed by a higher high, a higher low, lower low, and a lower high. So this is how you find your trend. Okay, the 3 points, you make sure always that there's been a previous breakout and if possible retest. It doesn't really have to be retest, but previous breakout. So that in this case, right, you see the market went up here, there was a previous high here, the market came here, basically broke it, retested, and then went up. So it made it 3 points. It made a higher low, lower low, lower high, and higher high. Sorry, higher low, lower low, and lower high. So now we're seeing this right on the 15-minute time frame. I usually use 3 minutes time frame. That's not 3 minutes, sorry, 3 different time frames, and that's what we're going to be going through. So the number 1, we see that 15 minutes. And usually what I would do when I do that, I like to go kind of back and forth, like I mentioned earlier, to confirm this on my 1 hour time frame, because the higher you go on the time frame, the better your chances are to be able to see what's going on in the overall market, right? So it's basically like if you are walking on a street, I'm going to explain this in a different way again so we can be able to grasp this. If you're walking on a street and, you decided to take an observation, right? You're really not going to see much. You will see some stuff, but it'll be very limited. Versus when you are in an airplane or a helicopter, you're going to see a lot more at once. You're going to see a lot of stuff going on at the same time. So this is the same way, right? So the higher you go in time frames, the better your chances are to see what is going on in the market. Because, for example, if you go on a 1 minute time frame and try to find a trend, let's say you found an uptrend in a 1 minute time frame, and then you want to on a hour time frame, it's probably going to be totally different. Either going to be the same uptrend or side trends or whatever trend, or it's going to be the total opposite, because the higher you go in time frames, the better your chances are to see what is going on in the market. So usually, like I said, I find I find my trend on the 15 minutes time frame, and then sometimes I will go and confirm them on a 1 hour time frame. Now, and then secondly, what we do after we find our trend, we go ahead and find a higher time frame. Okay, so even though we have the trend, we've seen what direction the market is in. The market is in an uptrend right here, as we see. We see, okay, cool. We find our 3 points. We see a higher low, a lower low, and a higher high. And this trend is not going to go on forever, right? Trend don't go on forever, because if that was the case, nobody will be making money, because everybody will be on the same side. And the reason why we make money in the market is because people are on opposite sides. Okay, so but there has to be a way that you can find that the trend is possibly going to end. It doesn't mean that 100% of the time that's where it's going to end, but it just gave you an idea of where the market could possibly, or the trend could possibly be turning. Okay, so in order for us to find that, usually to find a higher time, on a higher time frame, what I would do is I would go. Remember earlier I said I go back and forth with a 1 hour time frame and 15 minutes, right? So what I would usually do is I'll go on a higher time frame than I had with my trend. So let's say I found a trend on the 15 minutes time frame. What I would do is I'll go on a 1 hour time frame to find my potential trend reversal. So what I do is I draw a line. As you see right here, this line will make it a little bit, let's make this bigger, maybe this big, apply it and then save it. So from the current price, usually we do from the current price, but the current price, they high to the current price, that's where we go from. And then what we do, we go all the way to the left of the history. We'll go all the way to the left, okay? We'll go all the way to the left to see where the trend could possibly end. Okay, now we see here on the higher time frame, we see here this is the current price, right? This is not really the current price, but this is the highest to the current price. We'll go all the way left. We say, okay, on the high time frame, we see that even though the market is in an uptrend, it's possible that this market is about to make a reversal, because up here, what we see, this entire move, this entire downtrend here, it started from right here. So that indicates to us, that tells us that, hey, there's some unfilled orders sitting up there. So if you are going to keep going up, even though the market's in an uptrend, you got to be careful. You got to watch for these levels right here, like this level right here, so you are not just trading blindly. So now if you see this on a higher time frame, like I mentioned earlier, now you'll be very careful, right, when you're trading. So let's do that. And what I will also do again, I'll go even on a bigger time frame, on a 4 hour time frame, to be able to confirm that. And this is exactly what's going on, right? We see that, okay, the market this morning, it was already up by like 300 points. And it made this big move, went all the way up here, but then all of a sudden it just started coming down. Like if you were just trading like this, or let's say you were just trading like this and be like, oh, the market is going to keep going up because it just broke this high. But then you're not looking back in history to see unfilled orders or potential support and resistance, so that the market might be turning back, and then you just blindly got into the market. Okay, So now we've already seen this. See, even the higher we went on the time frame, we see that this market here, this reversal right here on the current price is happening because of this right here, because this supply right here. So this indicates to us that, okay, cool, there is somebody up here who have unfilled orders, and they could potentially push the market back down, because we're seeing history what happened from here. This is where the entire pullback happened, all the way here, all the way down here. Look at this move. This is a huge move, and this happened over the course of what? This happened since July, and came all the way down to August. So for probably a month, just around a month, the person kept selling in that position. So it's possible to still have unfilled orders up here. So now we know on the higher time frame, we'll call the intermediate time frame, right? We know that, okay, even though the market is in an uptrend, now we know that it's possible the market is going to start making a reversal here. So then now we know, okay, if we are going to be buying, we got to be very careful. We're either going to jump in with small contracts, or we are going to be sitting on our hands until we see what happens within that area. Out of the market, make a huge pullback, we should change our mind to a short. Now going back on the to sell short, going back on the time frame to find what you call it, downtrend, and then we can enter. So that's how I find where the market is going to make a potential reversal, or in a simple way, where the trend is going to end. So now we know here the trend is possibly going to end right here, and then now we're going to, so after we find number one, what we find is our trend, what direction the market is going to go, and then we're going to ride with that. And number two, we're going to find where is a potential spot that the market, that the trend is going to end. And then number three, of course, after finding all those things, then you are going to find a place that you can enter the market, right? So, and right here, so usually I enter my trade on a 5 minutes time frame. Okay, 5 minutes. So after we've gotten all those other informations, now I know that, okay, I might be buying. I'll probably be buying because I see the market is in an uptrend. But even though I see that up there, but I'm going to go very small on my contracts. Okay, I'm going to be very tight on my risk management. So now what we do is we go, in order to find our entry, we go from the current price, here, and then we go to basically we're going to be looking left, but we're going to be looking for the closest strong move. That's what we're going to be finding, the strongest move that happened. And in this case right here, where do we see? What's the first thing that came to our mind? Right here is where we have in mind. I'll go here and I'll draw the shape. I'll draw this for this. Come on, bro. Come on. Okay, so that's not working, but this is what I'm going to do. So we'll do the rectangle. And this is where, now, remember this, the rule for us to find our entry is to go from the current price down to the left and find the last strongest move that happened in the market. And that's where we're going to be putting our entry. Now, also, we can pair that with going down, finding this in this case, and trying to find in history other supplies and demands. Supply becomes demand, demand becomes supply. Those are indications that, okay, this is a good place to start from, or a place, let's say for example, a demand zone where the market may continuous bounces off of that. Then that gave an indication, okay, cool. So that in this case right here, what I see is this. Maybe I will not, maybe I probably will push my let's say I did my entry right here at 20,500. Now I can probably have my stop loss below right here. So I'll probably have this like this. Will be a big stop loss. And remember what I said, when there's a potential reversal, we got to be very careful with our risk management. So in this case, I'll probably be going with one contract, and I'll have my stop all the way down here. And the reason why I see that as a potential entry is because of this right here that happened. Supply becomes basically demand in this case, and then going here, we see there are multiple bounces off of this spot right here, like I mentioned. Okay, so That's basically how that's very simple. So you just go from current price below to the left, the last stronger move, that's where you're gonna have your entry. And then you just gotta make sure you pair that with your risk management rule on exactly how you want your risk management to be. And then you call it your trade. So it's very simple. Now, maybe on my next video, I'll be posting the different time frame, because you might be asking questions right now, but wait, how do I even know what time frame to use, to find my trend on, where do I enter, where do I not enter, and all that stuff? Well, on my next video, I'm going to post that, or maybe I'll make a post about that. So keep your eye out for that. Like in this case right now, I'll probably be comfortable going short and trying to ride this right here, but because the market is in a strong uptrend, you don't want to play around with that. Instead, you just want to wait, sit on your hands. So I'm going to read this and then I'll post it eventually. So if you are, here are the time zones, right? If you are going to be finding your trend on the 15-minute time frame, your high time frame to see what the potential trend will end should be 1 hour, and your entry should be 5 minutes. And second to that, number two, if you are going to be finding your trend on a 1 hour time frame, your high time frame should be 4 hours, and your entry should be 15 minutes. If you are going to be finding your trend on a 4 hours time frame, your high time frame potential trend in, right? High time frame, the HGF, the high time frame should be daily, and then your entry should be 1 hour. Okay. Now, sometimes you might say just a little bit of a risk management here, right? If let's say you enter the trade, you should probably be looking for 3 to 1. Depends on your risk management. If you're risking $100, your profit goal should be like 300, or maybe that's another video for another day. But or maybe you're looking for 5 to 1 or 10 to 1. So it's all what you made it to be. But thank you so much for sticking through this video. I appreciate it, and we are going to be posting more how-to videos on here. Thank you. Subscribe, and again below, if you are a prop firm trader or you want to be a prop firm trader, go ahead, use my coupon code below, and then that will help the channel. So peace out, God bless you, and have a good day.